everyone, and welcome to the weekly market update. I'm Wael Makarem, market analyst at ICM.com, and I will be sharing with you my insight for the week. But first, I would like to remind you that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or sell a certain financial instrument. So first we are going to start with the developments of the COVID-19, talk about the US-China tensions, highlight the key economic releases and events for the week, and finally go over some of the major charts. So first, let's start with the COVID-19. As per the Johns Hopkins University, cases are closing into 5.5 million. Recovered cases are almost at 2.2 million, around 40%, and deaths are close to 350,000. Today, the Japanese Prime Minister Shinzo Abe ended the state of emergency as the country succeeded in controlling the virus spread, as he said. Major parks and terraces were opened also in Madrid and Barcelona for the first time in more than 2 months as the second phase of easing the lockdown measures kicked in. So this is from Spain. The South African president also mentioned that the country will ease lockdown measures starting June 1st. On the other hand, the White House announced that it is prohibiting foreigners to travel to the United States if they were in Brazil, as the country became the world's second worst affected country. It's going crazy in Brazil. The country is registering a lot of cases recently to be the second worst, the second worst most affected country. Also in Chile, the numbers are rising rapidly, which is putting the medical system under pressure near collapse. And finally, with some good news, China is making progress on developing a vaccine as soon as possible, as was mentioned today in the Chinese media. So this is for the COVID-19 developments. We're going to move to the second main market mover for the past weeks and for the weeks to come. The US-China trade tensions, or the US-China tensions in general. They were trade tensions before, but now it's generic. They are having tensions over a couple of arguments. Hong Kong developments fueled these tensions between the two countries last week, especially as on Friday China stated that they will impose a national security law. Also, the United States threatened to act against such act from China. And throughout the day, the U.S. Commerce Department stated that it would add around 33 Chinese firms and institutions to an economic blacklist for helping Beijing spy on its minority Uyghur population or because of ties to weapons of mass destruction and China's military. So this was a step taken by U.S. Commerce Department on Friday. Also the U.S. Senate passed a bill that would disqualify Chinese firms from being listed on American stock exchanges. So it is very clear that the Trump administration is cracking down on Chinese companies. Meanwhile, China vowed to retaliate against these measures. So it's as we mentioned during our market update last week, the tensions between China and the United States are a ticking bomb that could lead to further deterioration, maybe in the also global economic outlook in the coming weeks. So we have to watch out carefully any development between China and the United States in the coming weeks. So now let's highlight the top economic events for the week. We start with events of tomorrow. First, we start with the German GfK consumer climate, which is expected to tick a little bit higher to minus 19.1 from minus 23.4 as Germany started to ease lockdown measures. Also, the European Central Bank will publish its financial stability review. It is an assessment of the conditions in the financial system and potential risks. So also everyone should be careful for the assessment of these conditions, especially after the financial system in different regions around the world is under pressure due to the COVID-19. Then moving to the United States, the Conference Board Consumer Confidence will be out, almost a flat reading near 87. So 87.1, the prior reading is 6.9, nothing much of a change in the consumer confidence. And new U.S. home sales expected to come in at 490,000 versus 627 previously, so a sharp drop in new home sales in the United States. Then the Bank of Canada Governor Porlos will be testifying before the Senate Committee on National Finance. And after, the Reserve Bank of New Zealand will also publish its financial stability review. So this is for Tuesday. Moving to Wednesday, it's a bit shy. Only the Europeans, the main event of the day could be the comments of the European Central Bank President Christine Lagarde, as she will be speaking about the ECB's response to COVID-19 as the European Youth event. So this is her remarks will be monitored closely, especially if she's going to talk about maybe further stimulus from the European Central Bank. So these her comments or her words should be followed up carefully. Also, from the United States, we have the Beige Book. The Beige Book it gives an assessment on current economic conditions of 12 district banks. The Fed uses usually this commentary to take monetary policy decisions. And after that, we have the American Petroleum Institute will report the weekly crude oil stock. Last week it was at minus 4.8 million barrels. So moving to Thursday, it's a bit busy. We start from Australia with the private new capital expenditure. During the first quarter, expectations of a drop of 2.6%. Then the Eurozone consumer confidence unchanged at minus 18.8% as the preliminary reading. Then moving the German CPI ticks lower 0.1% in May versus 0.4% prior. Then moving to the United States, we have a series of economic indicators to be out. First, we start with the second reading of the first quarter GDP. The first reading was at 4.8% and expectations that the second reading will also come in at 4.8%. The GDP price index, a revision lower to 1.3% from 1.4%. The durable goods orders, a contraction of 18.5% versus a contraction of 15.3% back in March. The U.S. initial jobless claims, a report of 2.1 million claims expected, which could be the lowest since the real outbreak in the United States. Also, the U.S. pending home sales, expectations of a plunge by 15%. And then we end the day with the crude oil inventories by the U.S. Energy Information Administration, which came out at minus 4.98 million barrels last week. Also on Friday, we start early with the German retail sales. Also, a plunge of 12% in April, as companies were restricted to open, and people also had restriction on their activity due to the COVID-19. So expectations of a drop of 12% in April versus negative 5.6% in March. The Eurozone Consumer Price Index year over year for May, 0.1% versus 0.3% prior. And then moving to the United States, the core personal consumption expenditure price index, month-to-month for April, negative 0.3% versus negative 0.1%. This should be taken looking like investors should be looking carefully for any also further miss in the PCE price index and its effect on the future policy of the Federal Reserve. And one of the key economic indicators to be following this week is the personal spending for April. Since the personal spending for April, it gives us a hint on how much will the GDP contract for the second quarter. So expectations of a drop of 12.5% in personal spending for April. It's a very big number. So we have to look for its implications on the GDP for the second quarter. From Canada, we have the GDP month-to-month for March, a contraction of 9%. The US Chicago PMI 40.0 reading versus 35.4, a little bit of improvement in Chicago Purchasing Managers Index. And finally, the Fed's Chairman Powell will participate in a virtual panel discussion at the Princeton University's Griswold Center for Economic Policy Studies. Market participants will be looking for any hints or guidance on future path of interest rates. During his past appearances, Powell stated that the Fed is not considering at all having negative interest rates. So also maybe he will be also focusing on this point. So any hints for further stimulus or further a change in interest rates should be followed carefully from Powell. So this is for the top economic events this week. We're going to move now to the MetaTrader 4 platform and go over some of the major charts. We are going to start with the dollar index. We're going to start with the dollar index. So we are mainly on almost all currencies. We're still trading inside this consolidation zone that started since early April. We had last week a sharp drop, then at the beginning of the week we had a sharp drop and then recovery into the end of the week, and we had a bearish engulfing closing on the weekly chart. Moving to the daily chart, we can see it's very clear that we're still inside this consolidation zone. for almost 2 months. So the market rebounded last week from this trend line, which showed a little bit of support, and also we're still trading. It's very clear that we're still trading inside the consolidation zone, awaiting some fresh fundamental drivers. So this is for the dollar index. Let's go closer to have a look on the hourly chart. We had here almost a double bottom, and then the market moved up. If we add some of the indicators, the moving averages and the Bollinger Band, you can see that the market has been moving inside a consolidation, a slight zone since Friday. The Bollinger Bands are closing into each other, and the market is trading near the 100 and 200 exponential moving average. So awaiting some clarity in order to have the next move. So this is for the dollar index. If we have to look for some levels on the bigger picture, the zones that we mentioned. So expect a very tough resistance near 100, one level almost, and for support near the lows of last week, all around 98.70, and again at 98.35. So this is for the bigger resistance and support, and for the minor resistance, you have to look for 160, which was the high during the third week in April, the second week in April, in May. Excuse me. So these are the levels that you have to look out for when trading the dollar index: 100.60, 101, and from the bottom 98.73 and 98.35. So these are the key points to trade the dollar index for the coming week. The euro is exactly the opposite of the dollar. So if we go for the weekly chart, you have this very bullish candle, hinting to a positive rally last week. However, also if we go for the daily chart, we can see that the market was moving strong ahead earlier last week, and then going to the end of the week, the euro dollar trimmed the gains and dropped. However, we can see that the market exactly moved lower from almost this resistance zone that we've been monitoring for a while. So you have to look out for 110.15 for resistance, the first resistance for the euro dollar, and the second resistance at 111.44. And for the support, if we can draw this line here, it's clear also that the market bounced off of this trend line. So be careful for any break of this trend line, and also this level of almost 107.30. So this is for the first support zone, and the second support zone near the low of 106.30. So this is for the euro dollar. These are the key levels to trade. We are still trading inside this a smaller consolidation zone relative to the bigger one here. So the first levels to watch for the upside: 1.1015 and 1.1144, and for the downside 107.30 and 106.30. This is for the pound, the euro dollar. If we add the moving averages, also we can see that the market is being capped by the 100 and 200 hour exponential moving average, and the RSI is near neutral levels at 50 level. Moving to the pound, let's start with a weekly chart. We witnessed earlier here a steep move down due to the excessive talks on negative interest rates. However, last week we had a little bit of a pullback as the dollar suffered. So major currencies and riskier currencies were rallying against the dollar. The pound had this little correction to trim the losses incurred during the second week of April, and now we're trading steadily almost near 122 level. So nothing much for the pound. We had this move lower and then this correction. Now we're we're in a consolidation awaiting for fresh drivers to move. So this is a clear consolidation zone we're trading in, moving sideways down almost, but still you have to focus for any break below 121.50 and again at 120.74 from the downside. And for some positivity, we have to clear 123 area in order to be capable to trade higher towards 124.60. So these are the key levels for the pound dollar. So for a negative scenario, you have to look out for a break of 121.50 and 120.75, and for the upper side, you have to look for 22.95 and 24.60 for these levels. The moving averages But we're still also very close to the 100 and 200-hour exponential moving average. After this rally lower, we found some resistance near the 200-hour exponential moving average, and the market moved down again. And now Bollinger Bands are closing into each other, maybe signaling for a coming break. So watch out for the pound dollar for any break. Moving to the dollar yen. The pair was finding support near the 100 and 200-hour exponential moving average. Is clear here. On the bigger picture, there's nothing much happening for the pair, since both the dollar and the yen are gaining for demand, for safety demand, and both are losing momentum as investors are moving towards riskier currencies. So this is what's happening with the dollar yen pair. We can see that there is not much of a move for this pair. We're still trading inside the consolidation zone of almost 300 pips for a while. If we have a closer look, we can see that the market found resistance near the previous resistance levels at 108.05 almost. So we have to be careful to look for a break above this resistance to clear the way towards 109.35. So this is for the upside scenario, and in case of a downside scenario, you have to look for a break of this trend line, and then the interim support at 107.30, and then the next support at 106.70. So this is for moving downside on the dollar yen. I would like just to remind you again that all these opinions and analysis are just for educational purposes, and they shouldn't be taken as signals. So this is for the dollar yen. The Australian dollar was recovered from earlier losses incurred last week. So if we have here. So we can see here the market is still consolidating near the highest levels since March, as the risk appetite is improving in the market. So this is for the Australian dollar. If we have a closer look here, we're trading in a slight consolidation zone here ahead of key resistance near 66.20, which was the highest level since early March. So this is for the Australian dollar. We have to clear above the previous resistance of 65.60 and then 66.20 for further highs, and watch out for any break below the low of 65, which could trigger further selling towards 64 in case the risk appetite was hit by any developments maybe between China and the United States. So the Australian dollar is very risk sentiment, very sensitive to the risk sentiment, so watch out for any developments between China and the United States for any move. Also, there has been a tension between Australia and China concerning the COVID-19 report to the World Health Organization by Australia. So also you have to monitor this matter. For the US dollar against the Canadian dollar, on the bigger picture, also nothing much happening. We're still inside this consolidation zone. If we go for the daily chart, we can see here that the market is finding support near lows of 38.60, 38.40 almost, and resistance near this trend line combining the previous tops. So this is the clear consolidation zone since end of March. We're trading inside this almost 300 pips range, awaiting for fresh drivers for the Canadian dollar, and currently we are trading in the middle of this range at near 140 level. If we go for the hourly chart, you can see here that the Bollinger Bands are closing in, and also the price is trading near the 100 and 200 hour exponential moving average, and the RSI is almost near 15 neutral levels. So nothing much to look for from the Canadian for the USDCAD. We have to clear either ways in order to have a clear move. Also, if we go for the daily chart, we can see that the market is closing into the 100-day exponential moving average, and the Bollinger Band is showing that bands are close to each other. The market is consolidating, awaiting for fresh drivers in order to move either upwards or downwards. So this is for the Canadian dollar. Be careful for any break below 138.60 and any break or clearance above almost 140, 180, 142 level, or this trend line that we've been talking about, which could come in at 140, 130, which is the previous top for the Canadian dollar. If we move to the New Zealand dollar, similar path to the Australian dollar. a recovery last week from earlier losses incurred following the decision of the RBNZ to double the asset purchases. If we go for the daily chart, we're trading sideways up, slightly higher highs, slight higher highs. Here we had a lower low post the RBNZ, so also inside we're trading inside the consolidation zone. The move has been capped by the 100-day exponential moving average. So any break below above this trend line could open the way towards could clear the way towards the 200-day exponential moving average. The RSI is trading around 54, which is also considered a neutral level. So if you want to trade the New Zealand dollar, you have to look for these levels here. So on the downside, you have to look for any drop below 60, 63 level, and almost 60.15 or 60 psychological level. And on the upside, we have to clear above 61.53 to move higher towards this previous stop. It's almost the same with 61.50 and 61.50 and 61.70. So almost these are similar levels. So any clearance above this zone could trigger or open the way towards a move towards 62.50. So this is for the New Zealand dollar. Now let's move to gold, which had a negative week, move down last week from its highest level since late 2012. So the market rallied towards almost 1768 and then trimmed gains and dropped towards 1717 during the week and finished the week near 1735 almost. So watch out for any continuation for this prior move for gold prices. On the bigger picture, we've been trading outside this triangle that we witnessed earlier, and the market was able to retest this level during last week's drop. So watch out for any break below this trend line in 1710, and these levels which we're going to highlight on the hourly chart. So first, what you have to look for is any break below the previous low, which is 1717, which could trigger another move lower towards 1709, ahead of a major drop towards 1690, 1688. So this is on the downside for gold, and on the upside, if you're looking for positivity, you have to clear this trend line, this falling trend line. We have to trade above it, which could come also to an interim resistance at 1740, and any move above 1740 could trigger a move higher towards 1752. So this is on the bullish scenario. You have to look out for 1740 and 1753 as levels, and on the downside you have to look for 1716 and 1690. This is for gold. Silver, it's still trading inside this consolidation zone after this rally higher. So also watch out for any break below 1665, which could lead to a sharp drop towards this level of 1565, erasing all this rally. And on the upside, we have to clear the previous high. Mainly, we have a small resistance here, an interim resistance near 1720, and again at 1765, ahead of maybe this was a tougher resistance since it was the top of March. So watch out for any break above this point, because it could lead to a bigger move higher. Maybe we could retest this resistance level at 1893, but we need like pretty catalysts in the market in order to move. We had this move higher, and then we have this flag, and then a move higher, and then a consolidation zone, and another move higher, and now we're trading also in the consolidation zone. So any break below this level could lead the market lower towards 1565, where all this rally started, and any break above this high could trigger the way towards the $19 per ounce. This is for silver. Oil still trading near its highest levels, supported by OPEC cuts and also some private production cuts. So the positive bias is supporting oil prices. Also, the drop in inventories in the United States reported by US Energy Administration, Information Administration, also lifted the sentiment. Prices, we have this resistance, the previous high on the July delivery at 34.56. Any clear above it could lead us to a move higher towards 36.88, and then to close the gap opened earlier in March. So this is for the upside scenario for oil And on a bearish move, we have to look out for 3080 level, which was here. Here you can see that the market rebounded exactly from this previous stop. So the stop became it was a resistance, became a support, and the market moved higher. So watch out for any break below 3080, which could open the way towards a move lower towards this resistance level near $27 per barrel. So this is for oil. On a bullish scenario, you have to look out for 34.55 and 36.65. On a negative scenario, you have to look out for a break below 30.80 and again at 27. So this is for oil prices. Moving to Dow Jones. The market rallied last week, found a little bit of resistance near April high and near 24,700. We're trading near this this tough resistance here. So any break above this resistance could lead to a move to close this gap near 500 and maybe have a rally towards 25,500. But we need Trump and co to have to support the risk sentiment and not to weigh on it with any further moves or retaliations against China. So this is for the upside scenario. On a negative scenario, you have to look out for any break below 24.80, which was here almost a double bottom. So look out for this support here, 24,087, where any break below this level could open the way towards a drop towards these support levels here, 23,200 and 22,700. So this is on a bearish scenario for the Dow Jones. If we go for some of the indicators here, we can see that the market is trading near the upper band, trading almost the past hour traded above the upper band, above also the 100 and 200 exponential moving average, and the RSI is closing into the 70 level, trading above the 60 positive bias level. So this is for the Dow Jones. Just if you're trading indices or stocks, just be careful for any headlines regarding the China United States matters. So since they are affecting risk appetite and they are weighing on the markets and the stock markets heavily. So this is all for today. If you have any questions, please write them down so I can answer them. So please, if you have any questions, write them down so I can answer them. I would like to remind you all the opinions, analysis, news, and information mentioned in this webinar are only for educational purposes and shouldn't be taken as signals or advice for trading any financial instrument. Okay, perfect. So this is all for today. I'd like to thank you for joining. These are you can reach us at these numbers here and at the email support@icm.com or webinar@icm.com for further inquiries. This is all for today, and thanks again.